Tous les mammifères sur cette planète ont contribué au développement naturel d'un équilibre avec le reste de leur environnement. Mais vous, les humains, vous êtes différents.
Bonjour à tous et toutes. Bienvenue dans Horizon Durable, un podcast de Ports en Part. À chaque épisode, nous allons à la rencontre d'entrepreneurs et d'investisseurs engagés pour la transition écologique et sociale. Je suis Clémentine de Butler, responsable ESG de Ports en Part Gestion. Today's episode will exceptionally be in English. We will talk about what is impact investing, sharing definitions, insights on this market, and deep diving on two very interesting impact investments that BNP Paribas has done recently. And for that, I had the pleasure to meet with two of my colleagues from BNP Paribas Asset Management. Bérénice Lasfargues, who is Sustainability Integration Lead at the Sustainability Center. Hi, Bérénice.
Hi, Clémentine.
And Pauline Blandin, who is Investment Director in the Impact Investing team of BNP Paribas Asset Management.
Hello, Clémentine.
So, to begin with, Bérénice, can you give us a definition of impact investing?
Of course. Thank you, Clémentine. So what's interesting is actually there is no one definition of impact investing. Different organizations, firms may have differing views of what impact investing actually means in practice. However, the GIN, that is the Global Impact Investing Network, which is one of the leading standard-setting organizations in this space, is recognized as having coined the mainstream definition of impact investing, which is investments that are made with the intention to generate positive, measurable, social and/or environmental impact alongside a financial return. So if you take this definition further apart, you'll see the words of this definition are quite deliberate, and they refer specifically to the three common building blocks of impact that are widely shared by the industry. Those are intentionality, additionality, and impact management and measurement.
Okay, so going into more details on these three pillars, intentionality, how do you assess it in concrete terms?
Yeah, so intentionality is really the idea that, as the definition states, investments are made with a specific intention of generating that impact. So impact cannot be an unintended byproduct, but is the central focal point of why you invest. For us, we work at fund level, and so we created a framework to assess that intentionality. So we look at four criteria. The first one is that the explicit impact intent, which is either aligned with the Sustainable Development Goals or other widely macro sustainability impact goals, are clearly articulated in a legal and or marketing documentation of the strategy. But we also have, that's the first criteria, but we also have three other criteria for intentionality, which we call impact perimeter, patient capital, and do no significant harm. So impact perimeter, the idea is that the impact objectives must be systematically applied to the entire strategy, apart from liquidity management and derivatives. So that is, you cannot just do impact on like a small pocket of your products. The third criteria is patient capital. So impact investing in the way it is created is long-term. And so holding period of assets should be adapted to the achievement of the intended impact goals. And the last one is do no significant harm, meaning that as you try to have positive impact, you have to make sure that you invest in a way that avoids or minimizes or mitigates potential negative impacts.
Okay, and now regarding the second pillar, additionality, how can you demonstrate the link between an investment and the solving of a specific issue?
So what's key here is that each investor has a clear theory of change. And so a theory of change impact is basically a framework whereby you articulate how and why a particular investment strategy is expected to lead to a specific social or environmental outcomes. And as part of this theory of change, you state your problem statement. So you say the problem, social or environmental, that you're trying to address. You state your levers of action. So how you will address a problem, the planned causal pathway, so how inputs that you have, capital expertise, activities, investment partnership will result in specific, outputs and outcomes, and the feedback and learning loop that you're planning to have, and how does this relate to the specific impact objectives and KPIs. So within the context of the theory of change, the additionality is those levers. The levers of action that is basically what you're doing as an investor that contributes to the achievement impact that would have otherwise not occurred had there not been your involvement. And so there may be many channels of additionality. For example, you could be, providing capital to underserved populations, trying to uh, fill a market gap. You can be having a form of financial additionality in which, for example, development finance institutions can use below market rate financing, but also you can have additionality via your engagement with the investee companies that you're having. So there's many channels of additionality, value, developmental, financial, to name just a few. And as an investor, you need to state clearly what channels you're using, and that's going to be coming handy because I know Pauline will speak next about a concrete example of how they do this in their investment bucket.
And you mentioned return in the definition earlier, return expectation. Can you tell us to what extent it is taken into account in the investment decisions?
Yes, there is the expectation of return. So if you take, I think, a spectrum of capital as it relates to sustainability/impact, really impact that goes from ESG to, I would say, philanthropy. You have to see it as being on the left hand side. If I go from left to right, responsible investment, where here you're looking at incorporating ESG to mitigate risky environmental and social and governance practices in order to protect value. Then you have sustainable investment, which here you're trying to have a sustainable objective, but it's not necessarily embedded. You don't have necessarily an additionality. It's not necessarily embedded at every stage of the investment process. And even if you have a sustainable objective, it doesn't mean that you commit to having that reporting that is done. And then impact investing comes, I would say, after, just before philanthropy, because, and the difference, as you correctly pointed out, is that you are looking to invest alongside a financial return. And so it's not necessarily because you provide capital to an underserved population that by definition you are necessarily having not a financial return. I think the question is what type of financial return, and this is where you get into, within impact, there is what we call return first and impact first investors. Return first investors are really there to obviously protect their competitive financial returns. Impact first investors may sometimes be okay to get a below market rate return. And so if in the case within BNP PAM of, for example, a social business strategy, we are seeking an environmental financial return, but sometimes are also comfortable because we're impact first in our strategy to get a below market rate return. And obviously you have the whole, in terms of actors, DFIs, etc., that will obviously are also quite comfortable with below market financial returns.
Now that we have a precise definition, I would like to take a step back on the impact investing market. You mentioned the gene earlier. Can you give us some other key stakeholders of the impact ecosystem, institution, investors, association that everyone should know?
So there's a lot of, I would say, organizations that work on impact investing. So I'm going to name a few. Obviously, I talked about the Global Impact Investing Network, which is seen as a kind of leading standard organization in the space, but it's not the only one. We have the Global Steering Group on Impact Investing, which also does very interesting work. The GSG is really trying to create Impact Investing Institute in each of the countries it operates. And so for the French GSG Impact Investing Institute, we're represented BNP is represented at the board by Maha Keraman, for instance.
Also, you mentioned earlier that there might be different definitions or approaches regarding impact. Are there reference framework defining what is an impact investment strategy?
If we're thinking about France, there's a lot of work that has been done on what constitutes impact investing by the FIR and France Invest. And so we have our own kind of frameworks around that. A framework that is more global around that is a framework of the operating principles for impact management, which is 9 principles that aim to, the goal was to try and establish standards in order to scale the impact investing market with integrity. And so they bring in a broad tent, asset owner, asset managers like us, but also they're trying to bring philanthropies and also DFIs to really transparently establish, how they view impact, and they have to report annually on what their impact AUM is.
Thank you, Bérénice, for sharing this. So we've talked about organization, associations, and frameworks. There is a third category of actors, that is investors, obviously. And in a few minutes, Pauline will share her impact investor perspective. But now, would you like to share 2 words, Pauline, on this third category?
Well, I think there are some impact pure players or impact investors that have been pioneering the impact investment markets. So, for example, this year we have announced our investment in the third vintage of the Alter Equity Fund. But I think another interesting trend that we note within the private assets ecosystem is that we see more and more what we can call mainstream players that are launching some impact dedicated funds.
Impact investment is traditionally known in private equity. Can you give us an overview of the impact landscape in terms of asset classes, Bérénice?
2/3 of impact AUM are in private assets. Impact investing really has its roots in the private space. However, if we're thinking about, the size of the challenge in terms of financing of the Sustainable Development Goals, which is in 2.5 trillion annual funding gap that we have, there is a growing recognition that we need to expand impact investing to other asset classes. But the key here is to expand it with integrity, because there's a lot of concerns around impact investing in listed and what it means in terms of additionality. But we do see, we have within BNP Paribas a framework that is, asset class agnostic. And we believe that there's a way to do impact investing in the listed space that is rigorous, and that also makes sense. That will not go against the goals of impact investing. So that is aligned with intentionality, additionality, and impact management and measurement. I think that we also need to ask ourselves, the questions about, impact investing being a standard. Obviously, we do want more impact investing, but we want impact investing with integrity, and understand that impact investing, requires a lot of investors. And so, as long as we can, develop impact strategies that are rigorous, that meet the standards in terms of intentionality, additionality, impact management, and measurement, and transparency, I think this is a welcome development. But not all investors will have necessarily the means and opportunities to do so, as of yet.
Okay. My last question for you, Bérénice, is regarding blended finance. First, what is blended finance and how do you position it versus impact investing?
Yeah, so blended finance is really a kind of structuring approach that involves combining concessional capital that can be provided or public capital with commercial capital from private investors. And the idea here of using this structuring technique is to crowd in private capital into high impact sectors or geographies that would otherwise be underfunded. So you may ask, what is the link between blended finance and impact investing? So those are obviously different things. Impact investment are a type of investments. As I said, blended finance is a structuring approach to crowding private investors towards, high impact sectors. But we do view internally blended finance as being a subset of, the broader impact investing landscape. And in terms of structures used for blended finance, there's many ways that you can try and crowd it at private capital. You can use guarantees. You can use technical assistance. You can use first loss capital. And sometimes a lot of blended finance structures uses all of the above. It's really tailor-made to the type of investors you're trying to crowd in and the type of impact you're trying to have.
Now I'm turning to Pauline, who is Impact Investment Director within BNP Paribas Asset Management. Pauline, can you explain us what is the bank and BNP Paribas Asset Management impact investment strategy?
Hi, everyone. So thank you, Clémentine. I'm part of the impact investment team, which is, as you mentioned, co-managing an envelope of impact investment. So we are a team that sits between two departments, so BNP Paribas Asset Management Private Assets and Group CSR Positive Impact Business Accelerator. So we are operating within the private assets ecosystem. And so we are in charge of investing and deploying an envelope of 200 million euros. So we're not a fund, we're investing on BNP Paribas' own balance sheet, which allows us to bring patient capital, as Bérénice mentioned before. And our investment strategy has been defined around three impact areas. The first one is social impact, then we have natural capital, and the third one is local development and climate change. So we invest 75% of the envelope is to be invested directly in companies, so primarily in equity investments in Series A or B, but we can also do some debt financing when it's more relevant. And 25% of the envelope is for fund investment, so focusing on impact-focused funds. We invest tickets between 2 to 5 million euro, and we usually invest in companies that have already passed the proof of concept, and we invest to scale up their impact. And we have a global mandate. So we have for now invested mainly in French and one European company. We have made one investment that has impact in the emerging markets, but we are working on finding additional international investments.
Can you give us 2 examples of investments that you've done in the past years?
Yes, so I think the latest investments that we have just announced is in a company that is called Le Drive to Nu, which is an innovative startup that is disrupting the food retail distribution market. So what they do is that they aim to have 3 impact areas. First, they promote some products which are zero waste. And that means that, for example, the food that they will sell will not be packaged in single-use packaging, but they will be in reusable glass containers. And so that allows to avoid single-use packaging. They've avoided 2 million plastic packaging since they started operating in 2018. And we know it's a crucial impact area, especially after the UNOC, where we are well aware of the urgency to avoid plastic pollution from flowing into the ocean. Then their second impact approach is that they sell organic and local products. And the third one is that they do that with a fair pricing, both for their consumers and for their suppliers. So we've invested in their Series B to scale up their activities from 7 points of sales, mainly in the south of France for now. And we will help them grow up. They target to have 20 points of sales open throughout France in the next 4 to 5 years. And we will allow to increase their impact by 10. And so, for example, in 2024, they've avoided 300 tons of CO2 equivalent. And they ambition to increase that impact to 3,000 tons of CO2 avoided by 2017.
And for everyone's understanding, UNOC is the United Nations Ocean Conference.
Yes, definitely. And we, BNP Paribas, was pretty well represented, and especially on the second investment that I was going to mention, which is very much focused on direct impact on the ocean. Here we have structured an innovative financing mechanism, which is a blended finance structure. So echoing on what Bérénice has just explained, we are financing an organization that is called Blue Alliance. So they're a group of entities that are piloted by a non-profit organization based in the south of France, but with the mission to support governments in emerging markets, in particular Tanzania, Indonesia, Philippines, to manage their marine protected areas in an effective manner. And the way they do that is that they will develop some sustainable economic activities. So for example, aquaculture, sustainable fishery, ecotourism. They develop those activities with the local communities around the MPA, and all the profits of those entities will be redistributed to the non-profit entities in charge of marine protected areas management. So that allowed us to structure an innovative impact loan that will finance the development of those economic activities. We've invested $2.4 million in a facility that we have structured with a 10-year tenor and interest rates that will vary depending on the KPIs reflecting the impact that Blue Alliance will have delivered on the biodiversity. So for example, on the fish population regeneration, or on the surface of coral reefs that are effectively protected, and on the local communities in those regions. So for example, in the increase of the living income of those local communities, or people supported in those regions with employment or with training.
So it means that the facility ensure on-site measurement of the impact KPIs of the fish population, for instance?
Yeah, definitely. And so on that, well, we can rely on Blue Alliance team because within the nonprofit organization, they have scientific teams that are specialized in biology, in marine biology, conservation. And so they have implemented a methodology that is based on widely recognized international standards for coral reef protection, for MPA management. And they do on-site measurement of the fish population through cameras, through counting. They also rely on community-based science, also inviting populations to participate in this scientific measurement. And in the future, depending on if we achieve our ambition, which is to attract other lenders into the facility, we might also want to strengthen the second pair of eyes by adding an external verification on the impact that they will themselves measure.
And I will end with this question. What would you say, Pauline, to those who can consider that impact investing requirements are a burden or can be an obstacle for generating good return compared with classic investment?
Well, I think I would say that we have to navigate with agility and to avoid overburdening the innovative startups with reporting and administrative paperwork. But what we're trying to do is that we rely on the market coalitions, the work that have been done by our peer impact investors to come up with common set of KPIs to really measure the impact that these innovative companies will deliver. And so we're trying to work in good exchanges with our peers in the market to simplify the reporting that we impose to our portfolio companies. But for most of them, we're not even imposing that to them because impact-focused companies, they're also tackling the addressable markets of tomorrow. I came from the CIB ecosystem. I was working in the sustainable finance teams where we were structuring sustainability-linked financings for our big corporate clients. So this is one of the ways that BNP Paribas as a group can support the transition of those big corporates towards more sustainable practices. But those big corporates, they also need the innovations to support their transition of their activities, of their supply chains. And so if we want to have a holistic approach to the transition, we also have to invest in those startups that will bring those solutions to the corporates. But that's also a big opportunity for return drivers because there's an ocean of potential for scalability for these startups. And so it's also potential for return for the investors. And I think that what we see is that with those, the acceleration of the concerns from the corporates that will need those solutions, we have a growing amount of startups that become investable because of those underlying trends. And the fact that we're also seeing more and more mainstream private equity or venture capital funds that are launching impact-focused strategy is also a good testimony that we have a growing universe of investable opportunities, but also of investors demanding impact investment strategies.
Thank you very much to you both for joining me today. Vous pouvez retrouver tous nos épisodes sur notre chaîne YouTube et Spotify, Horizon Durable. Merci à tous et toutes.